So this quarter, we had a number of one-offs. So if you look at the entire quarter as is, we beat very substantially on the bottom line. But because we had a number of one-offs related to Commerzbank consolidation, the internalization of life insurance, and a number of other items, those hit the trading line, taking down the revenue line. So for our shareholders and for the market, we're going to explain the results excluding those one-offs. The bottom line is lower, but the numbers are much more balanced to what there was last year. So we are both a record with or without one-off at bottom line level. Without one-offs, which is the way to look at it, our net revenues are up. Our core revenues, i.e. the combination of NII, fees, and dividends are up. Our costs are down materially. Our cost of risk is stable where we wanted it to be. And therefore, our gross operating profit is higher year on year. So all that there is this quarter is, as we consolidated Commerzbank, we got a substantial one-off from the restructuring of the hedges, and that hit the trading line, taking down the revenues.
I also noticed that in two key markets, Italy and Germany, the revenue numbers were also down. Are you concerned? Are you seeing any sort of slowdown in these two economies?
Well, I mean, we need to remember that we are undergoing a complete reset on rates. Yeah. Rates are coming down. We actually thought we would be at this point in the year with our gross operating profit well below last year. Instead, we are well above last year, about 4%. We cannot beat the facts, so NII will go down, but we have reviewed our estimates, and we are now thinking NII will be down mid-single digits. Fees for the year will be up mid-single digits. Dividend will be substantially up. So the revenue line overall will beat. But obviously, depending on the market and the sensitivity to interest rates, the quarters of adjustment year on year will show down. But overall, we're not concerned at all. We're actually upgrading our guidance to 10.5 billion for net profit this year, and in excess of 9.5 billion of distribution. We are also upgrading our ambition for 2027, and we're now expecting to distribute more than 30 billion in distribution over the 3-year period, of which more than 15 in cash. So for UniCredit, I think what we really like to see is that the underlying business, the one excluding the one-off, is really accelerating ahead of what we expected. If you look at the results this year, none of the one-off or none of the consolidation or other noise is having any impact on what we're seeing as a progress of the business. And therefore, we're quite confident we can revise our guidance again and potentially further
this year. I was also interested in that point because ultimately, of course, UniCredit has been also followed by this M&A story, right? But you've always said that your focus is the business and the standalone business. Do you think that the numbers you're delivering today and that the increase in guidance will be enough to convince voters that UniCredit as is a strong enough investment case?
Well, I think so. But in the end of the day, it's shareholders' decision. From our standpoint, we have demonstrated all the doubters in the last 3 years to 24 and have beaten effectively 18 quarters in a row what people expected us to deliver. We are determined to beat again. And the next phase of UniCredit Unlocked, which started at the beginning of the year, is already accelerating fast. We said we would shift the attention from efficiency, which continues to improve, into how to grow the top line. Obviously, difficult to see when rates are coming down. But when we look at the progress on lending, I mean, just in Italy, we increased our lending to SME 7.5 billion in the half. In CEE, we're accelerating. In Austria, it's the first time in a long time we increased lending by 1.5 billion in the half. So I think all the levers around the client segments, the geographies, the products are running ahead of plan. And we're quite confident that once the normalization of rates has occurred, you will see it coming off in the numbers.
When it comes to the announcement yesterday that you're withdrawing your bid for Banco BPM, I'm trying to understand What is the plan for the Italian business? Because this was your key to strengthen UniCredit in Italy. So what's the plan now?
You know, I think the first thing I remind everybody that as the CEO of this bank, I'm not asked to do M&A. I'm asked to create value. I'm asked to strengthen the bank and make it bulletproof for the future. M&A can or cannot be a tool to do that. Sometimes it is, sometimes it's not. It depends on the situation. Where does that leave us, which is a fair question? It leaves us that, I would summarize it this way, the team in Italy is generating in 1 quarter the same net profit that BPM generates in a year. And we are accelerating, they are decelerating. So it means we will rely further on what we can do alone. We will rely on the gaining of market share alone. And I think that if you look at the numbers for Italy, the profitability, the quality of the numbers, the results that they're doing quarter after quarter, and the acceleration when you take away the adjustment of rates, I have absolutely no doubt that they're going to hit the ball out of the park.
Do you have any plans to make new bids in Italy, or is the political scene too controversial?
I think we've drawn a line on this transaction. To be honest, it had become a drag on us. We feel we were accelerating way further than they were, and the value had shifted. But most importantly, given the situation on Golden Power, there was no other place to go. And at some point, you need to cut your losses, eliminate your drag, and focus on what you control. We control the future in Italy, and we control it in the group. We're moving on. That's it.